an investment that lets you ride the crypto wave, Bitcoin, Ethereum, and the hottest industry players, while pocketing weekly cash payouts and watching your portfolio grow. Sounds like the holy grail of investing, right? Well, buckle up, because today we're diving into the BLOX Crypto Income ETF, a game changer that's turning heads with its 36% annual distribution yield and a knack for capital appreciation. Managed by a seasoned portfolio expert with 20 years in the game, this fund blends crypto's explosive upside with steady income, outperforming Bitcoin itself by 3x since its June 2025 launch. In the next 25 minutes, I'll unpack why investors are buzzing about BLOX, how it's built to thrive in crypto's wild ride, and whether it's the missing piece in your portfolio. Stick around for tips even beginners can use. No jargon, just real talk. Let's dive in. Today we're joined by a veteran portfolio manager who's spent 2 decades navigating markets, from the chaos of COVID to the crypto boom of 2025. He's the mastermind behind X Funds and the BLOX Crypto Income ETF, a fund that's got investors on platforms like X, Blossom, and Reddit raving since its debut. His firm's mission? Deliver innovative ETFs that balance growth and income, and BLOX is their crown jewel. With a portfolio that's up 20% since June, tripling Bitcoin's 7% return, his strategy is turning skeptics into believers. Let's hear how he got here and why BLOX is shaking up the crypto investment world. Our portfolio manager's journey to BLOX started during the COVID market upheaval, a once-in-a-lifetime roller coaster for investors. As a fixed-income expert, he saw interest rates hit rock bottom, with treasuries yielding near zero. Clients at his private wealth firm, who hadn't asked about treasuries in 15 years, suddenly demanded them as rates ticked up post-COVID. This sparked the creation of X Fund's first ETF, a treasury fixed income fund called FIX, which used an options overlay to boost yields, mimicking insurance companies' strategies but in an ETF wrapper. Think of it like buying bonds and selling call options to juice returns, a tactic that delivered 2 to 3% extra yield annually. But the manager didn't stop there. Crypto's meteoric rise caught his eye, and he saw a gap in the market. Income-focused crypto funds capped upside potential, leaving growth-hungry investors wanting more. Enter BLOX Crypto Income ETF, launched June 17, 2025 with a bold mission: capital appreciation first, income second. Unlike competitors chasing sky-high yields, BLOX aims to grow your investment while delivering a hefty 36% annualized distribution, paid weekly. Why is he excited? Crypto's been on fire, with Bitcoin up 32% from January to April 2025, and Ethereum surging 50% since BLOX launch. BLOX captures that upside while cushioning volatility with smart option strategies, making it a standout in a crowded field. BLOX isn't your average income fund. Its primary goal is capital appreciation, with current income as a close second. Most crypto income ETFs prioritize distributions, often at the cost of net asset value, NAV erosion. Think funds that pay 80% yields but watch their share price slide. BLOX flips the script. It's designed to grow your investment over time, leveraging the crypto universe's potential while delivering weekly payouts you can spend or reinvest. Since inception, BLOX NAV has climbed from $20 to over $23 per share, a 15% gain, plus 36% annualized distributions, totaling a 20% return versus Bitcoin's 7%. The fund splits its portfolio into 2 sleeves, crypto and equities. The crypto sleeve holds Bitcoin and Ethereum via ETFs like HODL, FBTC, and ETHA, using call spreads to generate income while preserving upside. For example, a call spread might sell a $70,000 Bitcoin call and buy a $75,000 call, capping some gains but allowing unlimited upside beyond the higher strike. The equity sleeve, with 10-15 holdings, each tilde 4% of the portfolio, includes crypto-adjacent companies like trading platforms, for example, a major retail trading app and a leading crypto exchange, chip makers, for example, a top GPU maker and a Taiwanese semiconductor giant, and miners, for example, Riot Mara. It also holds treasury companies like a Bitcoin-focused firm and an Ethereum-focused miner, plus innovative players like a blockchain payment company. What's unique? BLOX sells put spreads on equities, harvesting volatility for income without capping upside. For instance, selling a $100 put and buying a $90 put on a trading platform stock generates premium while limiting losses to the spread's width. This strategy has driven gains. Since launch, the retail trading app is up 45%, a miner is up 37%, and the GPU maker is up 25%. With equal-weighted positions, BLOX avoids over-reliance on one stock, unlike some funds betting big on a single name like a Bitcoin treasury company. Why prioritize capital appreciation? The manager saw too many income funds erode NAV, leaving investors with high yields but shrinking portfolios. Imagine a fund paying 80% annually, but dropping from $100 to $60 in a year. Your distributions feel great, but your principal's taken a hit. BLOX aims to avoid this trap. By selling put spreads on equities and call spreads on crypto, it captures growth. For example, Ethereum's 50% run, while generating a 36% yield. The manager targets a 50% annualized yield on options trades, but distributes only 36%, reinvesting the rest to boost NAV. This balance has driven a 20% total return since launch, outpacing the S&P 500's 12% and Bitcoin's 7%. Investors love this. On X and Blossom, BLOX is praised as a core holding or complement to other crypto ETFs. Why? It's not just Bitcoin exposure, you get the whole crypto ecosystem, miners, exchanges, chip makers, with less NAV decay. For example, a $10,000 investment at launch would now be worth $12,000 plus $900 in distributions versus a Bitcoin ETF's $10,700 total return. BLOX's focus on total return, growth plus income, makes it a long-term winner for those bullish on crypto. BLOX's secret sauce is its options strategy. Most crypto income funds sell covered calls, capping upside to generate income. If Bitcoin jumps from $70,000 to $100,000, a covered call at $80,000 keeps you from profiting above that strike. BLOX uses call spreads on Bitcoin and Ethereum, selling a call, for example, $70,000, and buying a higher call, for example, $75,000, to limit losses, while keeping unlimited upside beyond the higher strike. On equities, it sells put spreads, selling a $100 put, and buying a $90 put on a stock like a crypto exchange. This generates premium, for example, $2 per share, while capping losses at $8, $100, $90, $2 premium. Protective puts add another layer. If the manager senses a downturn, BLOX can buy puts outright to hedge, like insurance against a crash. For example, buying a $90 put on a $100 stock costs a premium but protects against losses below $90. This flexibility helped BLOX weather a late July 2025 sell-off, where Bitcoin dropped 4% in a day, but the fund's equity sleeve and call spread income kept losses to 2%. This strategy balances risk and reward, making BLOX resilient in volatile markets. BLOX is for aggressive investors who believe in crypto's long-term growth, not just Bitcoin, but the entire ecosystem. If you're comfortable with high volatility, miners and treasury companies have standard deviations of 50 to 70% versus the S&P 500's 15%. This fund's for you. It's ideal for those wanting income, 36% annualized, without sacrificing growth. Unlike Bitcoin-only funds, BLOX diversifies across crypto, Bitcoin, Ethereum, and equities, exchanges, chip makers, miners, reducing reliance on one asset. For example, if Bitcoin's volatility drops as it becomes mainstream, miners like Mara, with $5.5 billion in Bitcoin on its balance sheet, or chip makers like the GPU giant, can drive returns. The manager compares it to a Warren Buffett approach. Don't just own the train, Bitcoin, own the tracks, exchanges, coal, miners, and engine makers, chip makers. This broad exposure makes BLOX a core holding for crypto bulls, whether you're 30 and building wealth or 60 and seeking income with growth. Why include Ethereum and crypto equities, not just Bitcoin? When BLOX launched, Ethereum lagged Bitcoin, offering better relative value. For instance, Bitcoin was up 32% in early 2025, while Ethereum gained 50% post-launch, validating the fund's 20% Ethereum allocation. The manager avoids going all in on Ethereum, for example 40%, to meet market demand. Some investors on X grumbled about any Ethereum exposure, preferring Bitcoin's dominance. Equities like exchanges, market cap $80 billion combined, and miners, generating $800 million in annualized revenue, offer leverage on crypto's rise. If Bitcoin hits $200,000, a miner's revenue could double, boosting its stock 2-3x. This diversified approach amplifies returns without leverage's decay. BLOX targets a 50% annualized yield on options trades but distributes 36%, reinvesting the rest to grow NAV. Why? High volatility in crypto stocks, for example miners with 70% implied volatility, allows juicy premiums, but the manager avoids juicing yields to 80 to 90% to attract assets. That could erode NAV, hurting long-term investors. By keeping 14% of income, BLOX buys more shares of high upside names like a blockchain payment company, up 100% since launch. This strategy paid off. Distributions have held steady at 36% despite crypto's swings, and NAV has grown 15%. For example, a $20 share now pays 14 cents weekly, $7.28 annually, and the share price is $23, boosting total returns. BLOX pays weekly, not monthly, based on investor demand. Pre-launch, the manager polled X and YouTube peers, finding overwhelming support for weekly payouts. Investors love the flexibility. Cash every Monday to reinvest, diversify, or spend. Weekly distributions slightly lag monthly ones by 0.5% annually due to transaction costs, but BLOX's strong performance, 20% total return, offsets this. For instance, $10,000 invested at launch yields $69 weekly, $3,600 annually, letting you buy 3 more shares monthly at $23, compounding your stake. The manager amended the prospectus pre-launch to make this happen, showing responsiveness to investors. The fund's success hinges on its options team, led by a veteran with 15 years running a top-tier trading floor. This team with 40 traders executes BLOX's complex strategy, call spreads on crypto, put spreads on equities, and occasional protective puts. Their expertise, honed at a leading options house, ensures precise strike prices, for example at the money puts for 50% annualized yield, and quick adjustments during volatility, like July 2025 sell-off. The team's partnership with the manager's firm is seamless. They craft the strategy, and the traders make it happen, keeping distributions steady and NAV growing. How does BLOX maintain a 36% distribution despite crypto's wild swings? The manager sets a fixed rate, letting averages smooth out volatility. Unlike funds that adjust payouts weekly based on options income, BLOX dollar cost averages excess income to maintain stability. For example, a 4% daily Bitcoin drop might cut call spread premiums, but equity put spreads, for example on a miner up 37%, offset losses. Since launch, distributions have stayed consistent at 14 cents per share weekly, even as Bitcoin swung from $60,000 to $80,000. This stability, paired with 15% NAV growth, makes BLOX a reliable income engine. BLOX's 12 equity holdings, 10-15 planned, are equal weighted at 4%, covering custodians, for example 2 major trading platforms, chipmakers, miners, and treasury companies. This diversification mitigates risk. If one miner tanks, for example Riot down 20% in a week, others like the blockchain payment company, up 100%, balance it out. The crypto sleeve, 20% Bitcoin, 20% Ethereum, ensures exposure to both leading cryptocurrencies. Compared to Bitcoin-only funds, BLOX's broad approach captures revenue growth, for example, a miner's $800 million annualized revenue, and leverage on crypto's rise, making it a mini-ecosystem ETF. Absolutely, says the manager. BLOX is a buy-and-forget fund for those bullish on crypto's future. Its diversified holdings and uncapped upside make it ideal for 5-10-year horizons. For example, if Bitcoin hits $200,000 by 2030, as some analysts predict, miners and exchanges could see 3-5x returns due to revenue growth. The manager holds a sizable personal stake in BLOX alongside other X-funds ETFs, citing its balance of 36% income and 20% growth since launch. Unlike leveraged funds, BLOX avoids decay, making it a core holding for aggressive investors. BLOX distributions are partly classified as return of capital, ROC, sparking confusion. ROC isn't giving your money back, it's a tax-efficient byproduct of the spread strategy. When a call spread's long call gains offset the short call's losses, the IRS labels the payout as ROC, lowering your cost basis. For example, a $20 share with $7 in ROC distributions drops your basis to $13. If sold at $23, you pay capital gains on $10, taxed at 15 to 20% in a brokerage account, versus 24 to 37% for ordinary dividends. Over 80% of BLOX distributions are non-taxable ROC, making it a tax-smart choice for non-retirement accounts. In a bull market, BLOX shines. Since launch, the S&P 500 gained 12%, Bitcoin 7%, and BLOX 20% driven by equities like the retail trading app, up 45%, and miners, up 37%. In a flat market, call and put spreads generate steady income, cushioning stagnation. In a downturn, BLOX may lag Bitcoin slightly. A 4% Bitcoin drop could mean a 5% fund decline, but call spread income, 4% monthly, and active management, for example shifting to chipmakers, soften losses. During April 2025's 20% S&P 500 sell-off, Bitcoin held steady, and BLOX diversified sleeve kept losses to 10%. The fund's flexibility makes it resilient across market cycles. Crypto winners, declines of 30% or more, are common, with 17 such drops in Bitcoin's 15-year history. The 2018 crash saw an 84% loss, followed by a 500% rally over 3 years. BLOX is built for these cycles. In a winter, call spreads on Bitcoin and Ethereum generate 40 to 50% annualized income, offsetting price drops. For example, a 30% Bitcoin decline could be halved by 15% options income. The equity sleeve can shift to low-beta names, for example chipmakers over miners, during prolonged downturns, reducing volatility. Investors should stay calm, dollar-cost average into dips, and trust BLOX active management to pivot, as seen in July 2025's recovery. BLOX 12 equity holdings are equal-weighted at 4%, but the manager starts with 2% starter positions for volatile names like a blockchain payment company, up 100% post-IPO. If a stock like an Ethereum miner runs from $30 to $55, the fund waits for pullbacks, targeting buys at $30. This disciplined approach avoids chasing rallies, though it missed some gains. For example, the miner never hit $30. Top holdings like a retail trading app, 4%, and a crypto exchange, 4%, are chosen for revenue growth, $80 billion combined market cap, and stability, balancing miners' volatility. For new investors eyeing BLOX or similar funds, the manager offers 3 tips. Focus on the underlying story. Don't chase high yields. An 80% distribution reflects 80% implied volatility, up or down. Pick funds with strong fundamentals, like BLOX mix of miners, 800M revenue, and chipmakers, 20% annual growth. Research the holding's earnings and growth potential. Prioritize total return. Income is great, but NAV growth matters more. BLOX 20% return since launch beats 80% yield funds with declining NAVs. Compare total return charts on Blossom to see what's working. Have a long-term horizon, crypto's volatile, 17 crashes since 2010. BLOX suits 5. 10-year investors who can weather 30% dips for 500% recoveries. Dollar cost average to build your stake, even at higher prices, as long as NAV grows. Since its June 2025 launch, BLOX has won fans on X, Blossom, and Reddit. Investors call it a core holding or complement to Bitcoin ETFs, citing its 20% return, steady 36% yield, and NAV growth. Unlike leveraged funds with downside decay, BLOX delivers leverage-like returns, 3x Bitcoin, without futures. Its diversified sleeve, real companies with real earnings, makes it a safer bet than Bitcoin alone. For example, a $10,000 investment now yields $3,600 annually and has grown to $12,000, beating most crypto funds. The biggest misconception: its low 36% yield compared to 80% plus competitors. Investors fixate on yield, missing BLOX's total return edge. A 60% yield fund might lose 20% NAV annually, netting less than BLOX's 20% growth plus 36% income. The manager urges comparing total return charts, not just yields, to see BLOX's outperformance. For instance, since launch, BLOX's $23 share price and 14 cents weekly payouts crush single stock funds like MSTI, which lag their underlying assets. The manager hopes BLOX is remembered for its wins, holdings like the retail trading app, up 45%, and miners, up 37%, driving outsized returns. By staying diversified and active, BLOX avoids blowups from single stocks. If Bitcoin hits $500,000 by 2035, equities like exchanges and miners could 5x, making BLOX a legend for balancing income and growth. X Funds plans to launch more innovative ETFs, but only if they add unique value. A new fund is in the works, potentially another weekly payer, but details are under wraps. The manager's goal is to avoid cookie-cutter funds, focusing on gaps like BLOX filled in the crypto income space. Expect more active, growth-focused ETFs that leverage the options team's expertise. BLOX Crypto Income ETF is rewriting the rules for crypto investing. 36% weekly distributions, 20% returns since June 2025, and a diversified portfolio that captures the crypto universe's upside. Whether you're a crypto bull or an income seeker, BLOX offers a smart, tax-efficient way to grow wealth. Check it out on X Fund's website and follow the conversation on X and Blossom. What's your crypto strategy? Drop it in the comments. If you love this, smash that like button. Our puppy mascot did. Subscribe for more, and check out our last interview on your screen. Keep crushing the stock market, and take it easy. Peace. This video is for educational and informational purposes only. Investment performance is based on historical data and projections. Past performance doesn't guarantee future results. Always conduct your own research and consult a qualified financial advisor before investing.